Are they hindering the economic recovery? And just got about 30 seconds. What's the research showing us so far?
Yes. So even though states are revenues are holding up, they're still behaving very cautiously. States tend to fiscally, they tend to act pretty conservatively. So that is causing them not to hire back workers. And also the GDP numbers would indicate that states are holding back the economic recovery. So
it's like when your parents give you, okay, here's $100 for gas and a little, it gives you, when you were a kid or a teenager or college.
You're the parent of a teenager, we should know.
My dad used to give me gas money into my 30s and 40s. But it was just like, oh, I got a little bit of pad here. You know what I mean? And if we give states, cities a little bit of pad, does it give them some breathing room to let those economies really come back?
Sorry, Mom and Dad, gas was $7 a gallon. I don't know what's going on.
I loved it. I love being, I love gas money. All right, Amanda Albright, great story. Public finance reporter at Bloomberg News. Off to World and National News, off to Nancy Lyons.
Thanks, Carol. New York Governor Andrew Cuomo is making his first public comments on a growing sexual harassment scandal. 3 women, 2 former aides, and a total stranger have accused him of inappropriate behavior.
I feel terrible that these people felt uncomfortable, felt hurt, felt pain from the interactions.
During a news conference this afternoon, he said he would not resign, but would do the job that New Yorkers elected him to do. Some new allegations are being leveled against former White House physician Ronnie Jackson, including drinking on the job, fits of rage, and inappropriate comments about a female subordinate. Bloomberg's Nathan Hager has more on that.
Those accusations come in a long-awaited Pentagon Inspector General's report. The Washington Post reports the watchdog interviewed 60 of Jackson's former colleagues at the White House Medical Unit, and only 13 had good things to say about him. One witness told investigators Jackson established a workplace where fear and intimidation were hallmarks. Jackson is now a freshman congressman from Texas. Before the report's release, he put out a lengthy statement accusing the IG of dredging up false accusations because, quote, I refuse to turn my back on President Trump. In Washington, I'm Nathan Hager, Bloomberg Radio.
People familiar with the discussion say former President Trump is strongly considering another run for president in 2024 without Mike Pence as his running mate. He's said to be looking at those who stood by him at the end of his term. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, along with Tim Stenovic. And you said, we were on a planning call trying to figure out what to do. And you're like, did you see what's going on in the private equity world?
Big day for private equity today. Look, the first story that caught my attention earlier today was all about Las Vegas. And Las Vegas Sands is leaving Las Vegas. Sands is selling the Vegas hotel to Apollo for $6.25 billion.
Yeah, that's a big deal, and it's interesting. And I feel like, we often talk about private equity. We talked about it earlier in the week with Kent Swig about all of the dry powder that a lot of some of those real estate funds, including the private equity world, have and are just kind of maybe looking to put to work into distressed assets. So Las Vegas Sands, one of it, $6.25 billion, you said, deal?
Yeah, and look, they've signaled in the past, Sands signaled in the past that they were going to, minimize their presence in Las Vegas. But it's notable because it's called Las Vegas Sands, and because that was where Sheldon Adelson got his start, but it also signals as to where the company is interested now, those Asian properties, and what they're saying about Las Vegas, too.
Yeah, exactly. The other thing is, Charlie was talking about Michaels being acquired by Apollo, $22 a share. Listen, that was, I think, kind of one of the, weren't they a pandemic play? Didn't they actually kind of take off a little bit? I have to look at Michaels. But what's interesting is it's just showing that these PE firms have money to put to work and they're looking for assets.
Look, that would absolutely make sense because people were at home. They were looking to craft. They were looking to do stuff at home.
Come on, you can be real with us. You were making
premium
scrapbooks.
just nonstop. We are not good at scrapbooks. I know we're going to regret that. It's all digital now.
Just taking a look at the stock, up 23% so far, obviously, on that deal. It's up 70% so far this year. 2021. It was up 61% last year. So yeah, that was a pandemic play. And then we also have Ken Griffin Citadel hiring Zachariah Barrett, former head of corporate credit trading at Apollo. So there's some moving around. End of year, people, we talked about this with Goldman, people moving to other places. So some interesting stuff going on when it comes to private equity.
Yeah, moving just after bonus season.
Yeah, exactly. All right, there's some deals happening. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Session, Dow back in the green, up 25 points now, higher by about 0.1%. 10-year yield 1.47%. S&P, NASDAQ both remain close to lows of the day. The renewed bout of Treasury volatility spurring a surge in bond yields, dragging down stocks as traders grapple with concern over stretched valuations. The S&P is down 35, a drop now of 0.9%. NASDAQ down 332, close to the lows of the day. today, down 2.5%. Again, 10-year yield 1.47%. Gold down 1.4%, $17.13 the ounce. West Texas Intermediate crude surging today by 2.7% at $61.34 a barrel. That is lifting oil stocks. Among them, ExxonMobil up 2%, BP up 3.75%, EOG Resources up 4.9%, Pioneer Natural up 4.1%, Chevron up 2.3%, and U.S. Oil, USO, that is the ETF, United States Oil Fund, up now by 3%. Again, recapping, S&P down 37, a drop of 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. March is Women's History Month, and Bloomberg Radio is looking back at some of the women who played a vital role in American history. Here with today's installment is Bloomberg's Renita Young.
On this day in women's history in 1913, the first major parade for women's suffrage took over Washington, D.C. Thousands of women gathered to call for a constitutional amendment guaranteeing women the right to vote. Women had been fighting hard for suffrage for more than 60 years by that time, but this marked the first major national event for the movement. The huge parade was spearheaded by Alice Paul and the National American Women's Suffrage Association. Parade organizers maximized attention on the event by strategically hosting it just one day before the inauguration of President-elect Woodrow Wilson. This tactic worked. That's today in women's history. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And a lot of great stories being reported for Bloomberg Business Week. One about sick time during working from home. We're going to get to that a little bit later on. Then there's a story that stayed at the top of the most read on the Bloomberg for most of yesterday about that 4-day work week. You and I talked about that.
Yeah, sounds pretty nice, I think, to a lot of people.
Tim's like, sign me up.
Not to everyone. Well, Stefan Nicola is the person who wrote that story, German business reporter for Bloomberg News, joining us on the phone from Berlin. Stefan, it's great to talk to you about this. I loved it when you joined us on Quick Take yesterday. Tell us about the company AWEN.
Yeah, thanks for having me. So AWEN is a Berlin-based tech company that when it went into lockdown last year, it realized that its employees suffered from stress, and it gave employees half a Friday off to sort of ease into the weekend. And that experiment went so well. Sales, employee engagement, and client satisfaction all rose that in January, AWEN decided to go a step further, and they rolled out a 4-day week for the entire company with no cuts in salaries or benefits. And the CEO says it's working really well.
Joel Weber, I'm thinking, all right, sign me up. Bloomberg Business Week editor Joel Weber is here on the Access Line in Brooklyn. I feel like as we're all thinking about, Joel, getting back to work post-pandemic, we're trying to figure out, is it a hybrid? Are we working from home? Are we going to the office? What is it?
Yeah, more importantly, like if you're going to do a 4-day work week, which day do you excise from that work week? Is it Friday is the obvious choice, but like Monday, there's a totally strong case for that.
It'd be nice to get rid of Mondays.
Yeah, really.
Wednesday was like the out of the box one that a colleague said, like, why bother with Wednesday? So I thought it was fitting that on a Wednesday we would talk about which ones to get rid of. But Stephen, the thing that I thought was most interesting about this is, like, even if you lop off a day, whichever day of the week it happens to be, it doesn't seem to affect productivity. What did we learn about that?
Yeah, so there are studies out there that productivity isn't dropping. In some cases, we are seeing increased productivity even. And the CEO of the company told me he saw the same. He said that employees find ways to work smarter and not less, but smarter, and they're just as productive. And just going back to the Monday, Wednesday, Friday discussion, he said that Fridays are the most popular days to take off, followed by Monday, and then actually Wednesday, as you suggested, because it gives people a nice break in the middle of the week, and they can restart recharged.
I'm just going to say Fridays I like because that's when we sometimes have a wine guest and we can drink wine on air. So I'm not getting rid of Fridays.
Nice to get rid of Mondays.
Yeah, let's get rid of Mondays.
Nobody says you have a case of the Fridays.
So Stefan, you know what I'm wondering though? Are we still productive these 4 days? Like when they cut it down, what did they find?
Yeah, they did find that productivity is basically the same or even improved, and it's that workers tend to be more focused during the 4 days, and they tend to put a lot of effort into those 4 days that they are either in the office or working from home. Interestingly enough, the CEO of that company also expected, productivity to suffer when he sent all of his employees at home, and he said clearly that didn't happen. Much the contrary, workers worked just as well from home, and lopping off another day was the natural choice for him. And he said it really restored a work-life balance that has, left him energized for the rest of the week.
Hey, Stefan, I want to move to another story that you wrote, this one coming out today, talking about Tesla. Speaking of the corporate world, you got to get to those 4 days of work somehow, and it turns out the European corporate car market is huge. This was really surprising for me to see. A lot of companies account for a large proportion of cars sold in Europe, right?
Yeah, that's correct. Around 60% of new cars sold in Europe are bought by corporate customers. So that is a huge market, and it's worth about $360 billion. And it's a market the local automakers dominate. And of course, Tesla has a hard time cracking that market, partly because it's lacking servicing stations. One company told me that its workers would love to get Teslas, but the company is not comfortable offering those cars as a perk because they are afraid that these employees would take time off from work to deal with repairs. And the likes of Mercedes, BMW, and Volkswagen, they offer same-day fixes nearby for these company cars that these workers get as a perk. And that's why they're still the favorite models for many companies.
But if you're only working 4 days, that extra day seems like a day that you could deal with your car. I'm just bringing it all together here with a bow on it.
Nice.
But how big of a deal is this really for Teslas? And they are, clearly they have demand if this many people want them. So is this corporate conundrum going to end up being a headache for them?
And Stefan, just got about 30 seconds.
Yeah, look, for now, of course, the company is building a new plant in Berlin. It's going to be huge, outputting as much as 500,000 cars. So they need to sell those cars somewhere, and the corporate car market is just too big to ignore for them.
Joel, I think there's a third story that Stefan can do that ties it all
I'm
together.
sure I can find one. Yeah, the week is not done yet.
Good stuff, guys. Thank you so much. Joel Weber, editor of Bloomberg Business Week, remote access from Brooklyn. Stefan Nicola, German business reporter, joining us from Berlin, staying up for us. And keep in mind, for those of you who are listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. Check out those stories. They're going to be in Bloomberg Business Week magazine.
What day would you get rid of?
Monday.
Yeah, same. Easy.
Hate it. This is Bloomberg.
reports, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, March 3rd. Choppy session. We've got the Dow now higher by 78 points. S&P, NASDAQ both retreating. 10-year yield 1.46%. The renewed bout of Treasury volatility spurring a surge in bond yields, dragging down stocks as traders grappled with concern over stretched valuations. S&P down 24, a drop right now of 0.6%. NASDAQ down 270, off session lows, down now by 2%. Again, the 10-year yield 1.46%. A sell-off in high-flying giants such as Apple and Amazon overshadowed gains in banks and energy producers. Among some of the banking names today, J.P. Morgan Chase shares are advancing by 2.9%, Citigroup up 3.2%, Wells Fargo up 2.7%, Bank of America up by 3.7%. Gold is down 1.3%, $17.15 the ounce, and West Texas Intermediate crude up 2.4%, $61.21 a barrel. The Federal Reserve is sounding a positive note about the economy, and with that story, here's Bloomberg's Vinny Del Giudice.
We're entering year 2 of the pandemic, and the economy is down millions of jobs. But there is some hiring, tepid growth, 117,000 more jobs in February based on ADP payroll data. That falls short of Wall Street estimates and points to a long slog. The government issues official data Friday. Vinny Del Giudice, Bloomberg Radio.
Rocket shares are plunging, halting a 3-day rally driven by sentiment that the home loan provider was the latest retail trader favorite for its high short interest. Shares are plunging now by 30%. Yankees manager Aaron Boone will take immediate medical leave to have a pacemaker installed. The 47-year-old Boone is scheduled to undergo surgery tomorrow at St. Joseph's Hospital in Tampa, Florida. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week, and really looking forward to our next guest, because I feel like a top story at this hour. It's got to be, it continues to be, and that is the economy. We're counting down to Friday's monthly jobs report, watching the prospects for another round of stimulus from D.C. So I got to say, great to have back with us Peter Atwater.
Yeah, Peter Atwater is an adjunct professor of economics at William & Mary, joining us on the phone from Pennsylvania. Professor Atwater, great to have you on the show. How you doing?
I'm doing well, Tim. Thank you.
Good. What do you think of the? We've been dying to have you on, and we're lucky to get so much time with you. How is the American economy doing right now? Because we are getting so many mixed signals, right? There's this optimism flashing in the bond market right now. The stock market is just off of record highs in recent weeks. At the same time, though, 10 million Americans out of work.
So it continues to be the K-shaped recovery. For those that were able to migrate to work from home, they are now counting down the hours to the reopening of the economy and getting back to life as normal. But as you said, there are 10 million Americans unemployed, 4.5 million filing continuing claims, for whom the recovery is going to be very slow even once it's reopened.
What's kind of wacky is, and we just did a conversation with one of our reporters, it's among our most read stories on the Bloomberg, and it has to do with, Peter, what's going on in states and state revenues. I think we all thought, oh my God, the states are going to fall apart, municipalities are going to fall apart. Revenues actually aren't down that much. And this is kind of going against the expected $200 billion in state aid that's expected to come from the COVID relief package from President Biden. What do you say to that?
So I say that we're seeing similar unevenness that we are seeing with individuals, that we're seeing with businesses, we're seeing it with states. And so the challenge now for the administration is, how do you provide support for the states that are not doing well in the face of the economy about to reopen? And, without it being viewed as a bailout on the one hand, and also without it being viewed as incremental stimulus that runs the risk of the economy running hot. And I think it's going to be very difficult for the administration to get the current package that it's proposed on the states through, because as things stand right now, it gives everybody a reason not to like it. It's too much stimulus, it's too much relief, it's a bailout. Something is going to have to give there.
Well, are you worried about inflation?
I'm not.
Okay.
I feel like the lone voice here. You know, last week.
Sorry.
Last week we saw this intense capitulation, this intense climax on the reflation trade and bond yields. You know, Carol, I spend a lot of time looking at Google Trends, and I do because it shows when the retail investor shows up. And suddenly last week, all they wanted to do was to search for reflation and bond yields. And that feels, you know, we may go a little higher, but that feels to me very sort of GameStop-ish, where there was this intense fury that then fizzled out. And I honestly think folks have gotten way ahead of themselves on the reopening.
So do you think the move up, like we were talking about the 10-year at 1.5, we've gone as far as 1.6. I kind of see it as a little bit of a catch-up from the equity bounce back of, okay, where we can see a trajectory of things getting better. It's going to take a while. How did you see the move up, though, in yields?
So I saw it in some ways very much mirroring what we've seen in commodities.
Okay.
And so we've also seen everybody now worried about shortages and, you know, the supply chain being a problem. The White House had a group of folks in last week worrying about chip supply. And so that to me is all indicative of the same kind of sentiment that there are shortages, that inflation is built into the system, and that problems are coming ahead. But it all presupposes that when the economy, quote unquote, reopens, people now fantasize that they're going to get back to what was, and we never do.
I love this. I tweeted about this. Wait, I just got to jump in because you say this whole idea of getting back to normal, right? The return to normal. I probably would be a really rich woman if I had a nickel for every time I said it or a guest said it. But you're saying that we don't, that's not what happens.
No, we carry our experiences, particularly traumatic experiences, with us. And I think that there's, you know, those that did not experience trauma, they've been spending wildly on homes and other things already. So I struggle, other than with travel and some entertainment, where those at the very top are now suddenly going to splurge. But I worry as we move down the economic chain, there are people who've been traumatized by this financially, and for whom I think we're going to see continued hoarding, continued reluctance to spend. You know, I think about it in terms of what I call the pantry effect, where when you didn't have enough.
Okay, guys, I'm going to place a new order to sell short euro. The price I'm looking 120.70.8. Just right here. Okay. Okay, look like no, not yet. We didn't execute it yet, so if it will go once more time. We're still in a queue. So if you want, you can place an order if you're looking to sell short. Okay, position opened, short position at 120.70.8.
Millions and millions, but I have some storage, but not a lot.
So toilet paper, not at Carol's house.
It's a little bit different. Peter, we're going to come back to you. Peter Atwater, adjunct professor of economics at William & Mary. We're going to continue our conversation in just a moment.
Let's get a check of World and National with Nancy Lyons. Hey, Nance.
Hey, Tim. Federal health officials are urging Americans to continue to follow CDC guidelines to stop the spread of coronavirus, even as some states loosen or even abolish their COVID-19 measures. CDC Director Rochelle Walensky says we still need to be vigilant.
Stamina has worn thin, fatigue is winning, and the exact measures we have taken to stop the pandemic are now too often being flagrantly ignored.
Texas Governor Greg Abbott has said his state would lift its mask mandate and reopen businesses next week. And Mississippi is lifting its mask mandate today, and businesses are able to operate at full capacity. The House is revisiting a bill it passed in the last session, which expands early and absentee voting, makes it easy to register, curtails gerrymandering, and requires donors to be identified. Bloomberg's Irv Chapman with more.
Democrat Matt Cartwright focused on the campaign finance provision.
The For the People Act is to restore democracy to this country so that we know who's paying for these elections. The dark money interests are squealing about it.
Republican Andrew Clyde.
I read the bill to see what I needed to obtain and cast an absentee ballot. The hypocrisy by the liberal left to eliminate voter ID is stunning.
Republican Marjorie Taylor Greene then moved to adjourn, a delaying tactic that signaled a long day before the Democrats passed the bill. In Washington, Irv Chapman, Bloomberg Radio.
A somber New York Governor Andrew Cuomo is apologizing following sexual harassment allegations against him. He said today he has learned an important lesson about his own behavior around women, but says he does plan to remain in office. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So among the most read stories on the Bloomberg, man, we've said this before, you put the word bonus in a headline and it's going to trend highly on the Bloomberg terminal. Societe Generale cutting the bonus pool at its investment bank by about 20% after trading hits in 2020 last year handed the group its first losing year in more than 3 decades. We've talked a lot about bonuses and bonuses being pared back.
Yeah, we have. And across the company, payouts being reduced by an average of 15%. That's according to a person familiar with the matter who asked not to be named discussing these confidential matters. The bank's market unit posted a net loss, saw an even bigger pay reduction. Some equity derivatives traders facing a bonus cut of more than 80%.
And I feel like we were schooled big time after the financial crisis about bonus, and it's, bonus is a big part of folks who work on Wall Street, their income. So when you talk about some of these cuts, it's significant.
Yeah, the bank's traditionally robust equity trading unit delivered a 49% revenue drop in 2020. On Wall Street, investment banks, of course, posted a double-digit gains in bonuses to match.
Yeah, they've been struggling. There's another statistic in this story about how it's been a tough year. The CEO, though, has seen shares of the French lender slump by more than 2/3 since he took over back in 2008. So it's not been an easy run. Along those lines, another story that popped up on our radar, it deals with another big bank. We're talking about Goldman Sachs and New York City mayoral candidate Andrew Yang. He's garnered name recognition during his presidential run, said he was depressed after a Goldman Sachs executive confided in him, that the bank was opening a branch office in Tampa.
Yeah, look, this is a big part of the conversation that's happening in New York City right now. We talk about it a lot. Is this exodus to Florida actually happening? Is it permanent? Yang said that reversing an outflow of businesses and talented workers from the city will be key to reviving New York City's economy and, of course, reestablishing the city as the world's financial capital.
We are losing people to Tampa? He spent about an hour with our team. He goes, it's a depressing story. So again, one of the most read. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It has been a choppy session. We have got the Dow higher right now, S&P, NASDAQ, both retreating. Let's get all the details as we head right over to the First Word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading mixed today with the NASDAQ under pressure again. Dow is still up 40 points. S&Ps are down 32, while the NASDAQ is off by 300 points. The U.S. 10-year yield at 1.47%. Gold is down 22, and transports gain 91 points. Among the main 11 SP sectors, only energy, financials, and the industrials were in the green. Tech and consumer discretionary were under pressure. And leaders to the upside in the Dow, American Express, and Boeing, while Salesforce and Microsoft led to the downside. In deal news, Michael's to be acquired by Apollo Funds for $22 a share in cash. And in other news, Oscar Health opened at 36, was priced at 39. Micron sees DRAM supply tight for the rest of the year. And Ford U.S. light vehicle sales fell 14.6% in February. Wrapping things up, some of the names putting after the bell tonight include Snowflake and Splunk. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg Times Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Still think Splunk is an unfortunate name for a company, Charlie.
Not going to say it is different, but I like saying it's Splunk.
I know, right? It sounds like it, right?
It's a good one for radio. That's how I think.
All right, Charlie, thank you so much. Let's get right back to Peter Atwater. He's adjunct professor of economics at William & Mary, still with us on the phone from Pennsylvania. And Peter, listen, I've said it a million times. We love hearing from you. You first coined the term to describe the economic world that we have been in, this K-shaped recovery. And I have to say, in the break, and Tim, maybe you come in on here, because we've been talking about the K-shaped recovery as it relates to the COVID relief package.
Yeah, and it's a conversation happening in Washington right now. Just today, President Joe Biden agreeing to moderate Democrats' demands to narrow that eligibility for those stimulus checks. So now individuals earning over $80,000 would not qualify for those direct payments, compared with a $100,000 cap that was in the previously drafted legislation. The ceiling for couples will now be $160,000 as compared to $200,000 before. Professor Atwater, is that the right move? Is that the right way to address the K-shaped recovery here?
Yeah, I think it is. I think that there has been, policymakers use fairly blunt tools. And I think initially there was a sense that everyone needed to be helped. There is much greater clarity today, I think, where the pain really is, as well as where those who have benefit really have fared. So I think that there is a need for greater precision and focus on those whose lives have been upended versus those who are already on the trajectory to recovery.
So I want to ask you, I kind of love your mix of, you worked in financial services, you're in academia, like you've seen a lot, you understand the intersection of a lot, Peter. And I do wonder if we are at this juncture where we can really make some big changes in our economy, in our world, and the inequities that are out there that are longer lasting. Like I've got cousin TJ who's tweeting at me, and I said, do you have a question for Professor Atwater? And he says, yeah, the economics of infrastructure and spectrum upgrades, the economic costs of not doing them. Like there are things we need to be thinking about. How do you think about it in terms of, let's do that long-term plan for America?
So I think given the current mood, it's going to be difficult for us to tackle abstract ideas like climate change. Now, having said that, I think there is enormous energy around addressing the problems that come from climate change, that come from the insufficient investment that we've made. And so I think that no matter the administration, we will see an emphasis on repair, replace, remediate, things that we see as real tangible problems that we have to fix.
What are some of those tangible problems?
Well, certainly the effects of climate change are places where, whether it's flooding, you look at, we still haven't done anything in New York around Sandy, but,
Which is shocking, right?
Yeah, and you're seeing, the infrastructure issues in Texas on the energy grid. I think that basic systemic infrastructure, I think we tend to think of infrastructure as solely transportation, but we have a number of critical systems and networks that need to be upgraded if America is going to be competitive against the global competition that's out there.
Are you optimistic that there is the political will for that long-term view? I mean, look, we talk a lot about executives at companies thinking on a quarter-by-quarter basis, but I think one criticism of people in Washington, elected officials, is that they think about the next election as soon as they win that current election.
So I agree with you that we are very short-term focused. With low confidence comes me here now thinking. But I also think part of that is a need for domestic investment versus investment abroad. And so I think that this mantra of, whether it's build America, build back better, make America great again, I think that both parties have tapped into a desire to reestablish America and focus on America first. That's what voters across the aisle are demanding.
Can we do that in a world where increasingly the borders have come down? Or, I mean, I know they've come back up again big time, but we constantly have, I've spent, I don't know, the last 5-10 years talking increasingly about globalization. Can we do it and it'll all work?
Well, we're going to do it, I think, whether it works or not, because there is a need for this, what I call the just-in-case economy. So that mindset that we have, that we need and expect critical supplies, critical manufacturing, things that are vital to the American economy happening in America. And I think we were awakened in terms of the pandemic and what we didn't make here and probably need to. And so I think there's again, a bipartisan view that we need to focus here at home first.
No, really, really thoughtful ideas and something to think about. And I think that's interesting how you said, Peter, about how both sides of the aisle are thinking about this kind of make America great again.
Yeah, we don't think of a common ground that often when it comes to Democrats and Republicans, but it's true.
Yeah, great stuff. Peter, be well. Thank you, thank you. Peter Atwater, adjunct professor of economics at William & Mary, on the phone from Pennsylvania. You read his bio and it talks about at 45, his son said, "You're halfway to 90. Like, what are you doing?" I'm so glad he's had some time for us. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I'm kind of still basking in the glow of the conversation with Peter Atwater.
He was great.
Yeah.
Coining K-shaped recovery. I mean, it's something that defines well, I was going to say post-pandemic, but really has defined the economic recovery or lack thereof for many Americans that we've seen.
I'm also loving that Make America Great Again, like both sides of the aisle thinking about that.
Yeah, just different terminology, right? Different communications.
Very much so. All right, let's get to your top business stories. Here is once again Charlie Pellet.
Hi, thank you very much. And here's what's going on. 28 minutes to go ahead of the closing bell. The Dow now swinging between gains and losses. Right now higher, barely up by half a point. We've got the S&P, NASDAQ decidedly on the minus side. 1% drop in the S&P, down 37 points. NASDAQ down 320. That is a drop right now of 2.4%, close to session lows. The renewed bout of Treasury volatility spurring a surge in bond yields, dragging down stocks as traders grapple with concern over stretched valuations. 10-year yield 1.46%, 10-year down 22.30 seconds. Gold down 1.3%, 17.14 the ounce, and West Texas Intermediate crude up 2.5%, 61.26 a barrel. New York City's health commissioner tells Bloomberg News the city could offer COVID-19 vaccines to all residents by late April. It's already given at least one dose to 15.6% of the population, according to our vaccine tracker. Texas Governor Greg Abbott lifting the mask mandate and other anti-pandemic restrictions, defying warnings from health officials about the perils of dropping those precautions too soon. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
Just a little over a week, Texas had this massive natural disaster from the ice storms and the power outages. And so vaccines in many cases are delayed into arms, and some had to be wasted because of that. So there is a delay in public health activity there. So turning off all of the things that we know work right now is really unfortunate.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer up 2.6%, BioNTech down 6.6%, AstraZeneca lower by 0.9%, Moderna is down now by 9.9%, Johnson & Johnson down 1.5%. Recapping equities now lower, the Dow down 12, down less than 0.1%, S&P down 1%, NASDAQ hard hit again today, tumbling 2.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Vaccine, vaccine, vaccine,
yes,
vaccine.
Dolly Parton. This is not Jolene. This is her new version, vaccine, because she got the vaccine yesterday.
Then that's a bit too late.
I can't tell you anything, can I, Tim?
Can I just say,
That's, I got it.
if you
I
don't
didn't
love
cheat.
Dolly, then just leave this country.
I was talking about me, okay, Carol, and what a great job I just did. But you are right.
I love Dolly.
She's a legend.
She is a legend.
She's a national treasure.
Oh my God, her stuff, it was, Dave, it was all over Twitter yesterday, her getting her vaccine.
Right. As she put it in her Twitter post, Dolly gets a dose of her own medicine.
Da-da-da. We
Because
love
let us
Dolly.
not forget that she gave $1 million to Vanderbilt University, and some of that money went to fund the basic research for Moderna's vaccine, which she received yesterday.
And you know what's so great about this?
What?
You know, okay, she donates $1 million.
Yeah.
She's Dolly Parton.
Yeah.
She said, I want to wait my turn. I don't want to skip the line.
She's just good people.
She is.
And then she goes, the Jolene vaccine. That's just like
perfect.
All right, Dave. So
It has nothing to do with the chart because
I love you for
when
doing
do
that.
a
Thank
chart
you.
About margin debt, it doesn't exactly bring a whole
Margin
lot of
debt,
songs
margin
to
debt,
mind.
margin. Yeah, it just doesn't work.
No, it's an important subject, but not one that necessarily has a musical tie-in. What we're talking about here is borrowing that's done to buy U.S. stocks. And There are numbers that come out monthly from FINRA, the Financial Industry Regulatory Authority. They used to come out from the New York Stock Exchange, and the chart actually combines the two to provide a historical perspective back to the 1990s. And, if you look at the figures out of FINRA, between last March and January, that's the most recent number because they're provided monthly, borrowing was up 66%. And set a record. And you see that and say, whoa, is it getting to be too much? In fact, I saw a report today from Julian Emanuel, who's a strategist over at BTIG, that noted specifically what was going on with margin debt. But I also saw a report yesterday from Steven Suttmeyer, who's an analyst at Bank of America, that tried to bring some perspective to the party. And the one piece of that I featured in the chart is looking at this margin debt relative to a stock market reference point. In this case, the value of the S&P 500 index when you add up all the companies. And when you run that calculation, you find out that, we're at about 2.5% of the total market cap when you look at that margin debt total. Well, you go back, say, 7 years or so, and it was more like 3.1%. And in fact, the number was in the high twos for most of the bull market between 2009 and last year. And it really kind of came down the last couple of years, and then it's just started to move back up. So the way Suttmeyer sees it, and as he put it, investors are not over-levered, which is another way of saying they haven't borrowed too much. If you want to know more, folks, send me an email. I'll get you a chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So good sign for the markets, meaning investors can lever up even more from here and play, or what does it tell us?
Yeah, that it's not the warning sign that if you just looked at the absolute total and the way that it's run up in the past several months, that you might get out of that. So in other words, there's less to worry about than meets the eye initially. That's basically the point.
But there is this divergence that happened in the last few months that we haven't seen pretty much ever, the chart goes back to the 90s, and it was barely diverging back then when it did diverge a little bit.
Yeah, I mean, we haven't seen a run-up this extreme in some time. There's no question about that. But you kind of have to put that into context. I mean, you are borrowing to buy stocks. So if the value of the stocks is going up, then really, you're not kind of taking on that much more of an obligation in relative terms. I mean, it's trying to bring a market perspective to what's going on. If you borrow to buy a house and the value of the house goes up, then in essence, the loan isn't as onerous as it was when you took it out. I mean, that's sort of the thinking here anyway.
Good point. Got a favorite Dolly song?
Well, Jolene's right up.
Yeah.
Yeah, it's kind of a classic. I Will Always Love You.
Yeah,
A lot of leverage.
She's just like, she did a lot. I think she was live in Queens just a couple summers ago.
Was she?
Yeah, and I missed out by not going, I got to tell you.
What a riot.
Yeah.
She's just, I love her. All right, Dave. Dave will be back a little bit later on with his stock of the day.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey there, Tim. A militia group may be plotting to attack the U.S. Capitol tomorrow, a day that's tied to conspiracy theories that March 4th is the true inauguration day. The warning came from the U.S. Capitol Police in a statement. They gave no specifics. Meanwhile, senators continue to hold hearings on what happened on the January 6th attack on the Capitol. Commander of the D.C. National Guard, Brigadier General William Walker, he testified today it was the Pentagon that delayed movement of troops after the first call for help from Capitol Hill Police Chief Stephen Sund.
The approval for Chief Sund's request would eventually come from the Acting Secretary of Defense at 5:08 p.m., about 3 hours and 19 minutes later.
Walker says Pentagon officials were worried about the optics of deploying armed federal troops to the Capitol. President Biden and Senate Democrats have apparently agreed to tighten the upper income limits at which people could qualify for stimulus checks in the party's $1.9 trillion coronavirus relief bill. The changes would have those $1,400 checks going to individuals earning up to $80,000, couples up to $160,000. New York Governor Andrew Cuomo says he will not resign despite multiple sexual assault allegations against him. He spoke about it today for the first time.
I feel
awful about it. And frankly, I am embarrassed by it. And that's not easy to say.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Masser, Tim Stanovic. It is Wednesday. It's Bloomberg Business Week. It's our Bloomberg Interactive Studio. And your face, my face, coming to a subway near you? Maybe not.
Maybe, if we go to Moscow.
If we go to Moscow.
Yeah.
Great. So let's talk about this.
Yeah, the Moscow Metro is going to let riders pay with a glance by year end. You know what? At first, I think on the surface, this sounds like, hey, great, totally convenient. But I got to tell you, Moscow has one of the world's biggest video surveillance systems.
Creepy.
Yeah, it's kind of a double-edged sword here.
Yeah.
So the Moscow Metro system carries more people annually than New York's. It's huge, New York subway. It's planning to use facial recognition tech to allow riders to pay their fares. The system is currently undergoing testing at turnstiles and ticket booths, but it's going to be available throughout the system by the end of the year.
Yeah, China's already doing this. We know, we've done several stories about that. And listen, it has created a ton of questions, stories when it comes to privacy. And right, you think about, although we're getting to a point where we flash our phone quickly at everything. And I don't know, is this just another step in that process?
Look, privacy advocates would say that because you're carrying around a smartphone, you're basically carrying around a very advanced tracking device at any given moment. But I do think it raises questions, especially somewhere like in Russia, like in Moscow, because the city does operate one of the biggest video surveillance systems in the world, and it's used it to enforce quarantine orders. But at the same time, opponents of Russian President Vladimir Putin claim that police have also used this type of technology to track down people who participated in these protests over the arrest of Alexei Navalny earlier this year.
That's exactly it. So what happens when you lose some of, certainly in a country like the United States, your right to protest is all of a sudden, although think about the facial recognition and social media that we've used to identify the protests on the Capitol.
Right. Very good point. And, you know, here in the U.S., as far as this technology is, there are big tech companies working on this type of tech. You do also have airlines experimenting with this tech for boarding purposes, but privacy advocates are not so keen on it.
And are you willing to do it to make sure the plane you get on is safe, but are you not willing to do it to just get on the train or a subway?
It's a can of worms.
Exactly. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We've got the Dow higher now, S&P, NASDAQ off session lows, but still red on the screen. The renewed bout of Treasury volatility spurring a surge in bond yields, dragging down stocks as investors grapple with concern over stretched valuations. 10-year yield 1.47% now. The S&P is down 30. That is a drop of 0.8%. NASDAQ is where the real damage is being done today. NASDAQ down 290 points. That is a drop right now of 2.2%. The NASDAQ Composite Index down 2.34%. Again, the S&P lower by 30, down 0.9%, and the 10-year yield worth repeating right now 1.47%. Gold down 1.3%, $17.15 the ounce. West Texas Intermediate crude advancing 2.5%, $61.26 a barrel. That is lifting oil shares today. After the bell, lots of earnings. Among them, Splunk. Right now, down by 3.5%. We've got Marvel Technology down 3.9%, also reporting after the bell. We'll be hearing from Snowflake and American Eagle Outfitters. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 11 minutes left in today's trading session. Bouncing around a little bit, bouncing around the bottom right now. I've got about a 2.2% decline on the NASDAQ, so tech stocks really taking the biggest hit here. Let's get into it with Sarah Malik. She's head of global equities, chief investment officer of global equities over at Nuveen, on the phone from San Francisco, overseeing roughly $420 billion in assets under management. Sarah, nice to have you here with Tim and myself. The tech rout, do we need to be concerned here?
Yeah, well, thanks for having me. There's three issues weighing on the market, and a lot of those are hurting these long-duration sectors like technology. The first issue is inflation. We do view that as more of a fear than reality, but it's causing a mini tantrum for the market. The Fed should stay on its dovish course, so I think that we're okay on inflation. However, the second is the backup in rates. These higher yields that we're seeing are being driven by growth, so we don't view it as an imminent risk, even though the 10-year interest rates are moving up. As long as growth expectations and vaccines continue to roll out, we think we'll be okay. Third is valuations. Valuations on the S&P are over 20 times at this point, and we need that earnings growth to kick in to drive the markets higher, because we don't expect any more valuation expansion. And the beneficiaries of that faster earnings growth are going to be those shorter duration cyclicals. And the source of funds for those cyclicals will most likely be technology stocks. And that's why you're seeing these tech stocks continue to compress in this kind of faster economic growth environment.
Okay, I want to start with number two, bond yields. Is there a number that we should be concerned about? Is there a point when you start to get concerned about rising bond yields?
We look at, for example, high yield spreads, which actually remain quite low, so that's not causing any issues. We look at the how steep is the yield curve. It remains steep, so it's telling you that growth is driving these yields higher, and it's not fear of a recession. We're also watching commodities such as copper. Copper prices continue to move up. That's pointing to improved economic performance. So as long as the drivers behind these yields are strong, we're not as worried about them. But you do need to watch these spreads. You do need to watch the slope of the yield curve. And if you start to see those start to move in the wrong direction, then we would become more concerned about higher yields.
Right, and the other thing is, there were some stories on the Bloomberg, some great reporting about inflation expectations, short term versus longer term. If you look longer out on the curve in terms of what investors are expecting, they're not worried about inflation. Is it important to us to keep that in perspective?
I think that's also another key to this is we do.
Okay, ladies and gentlemen, I'm going to place a stop on profit for euro. The price I'm looking to sell if it will change direction, 120.68.8. Just right here. Okay. So if you follow the trade, my trade and my strategy, you know what to do. If you don't have strategy and you follow the trade, please place your stop on profit at 120.68.8.
Opportunity in the market right now.
We think cyclicals are attractive. So looking for those companies that have the most bang for your buck in terms of leverage to the economy. So this is financials, the consumer, as the economies reopen, the consumer has a very strong balance sheet and the consumer should be strong. Going outside of the U.S., non-U.S. benchmarks tend to have a heavier cyclical weight than U.S. benchmarks, which tend to be more technology weighted. So looking at European benchmarks and also emerging markets, which should benefit from a reflation trade and also from stronger currencies versus a weaker dollar.
Hey, one thing I wanted to ask you, Sarah, is I think last time around, and I think it didn't work out either because of news or some other thing, that the market, the part of the market that you were looking at was, and I think this was in late February, you were looking at some of the digital names, whether it was a ServiceNow or a HubSpot. I'm just curious, do you still like that area of the market, which has definitely come down significantly from its highs?
Yeah, so we had found opportunity in some of these digital names in January when you saw a lot of the individual investors buying companies that were heavily shorted and some hedge funds that had to pretty quickly de-risk and sell some of these crowded technology names. And we still do like the structural growth of strong technology companies. The question is, what price do you want to pay for them? When you do see them dropping 15, 30% in a week, which for some of these companies that happened in January, we view that as a buying opportunity. And we think another one will be coming up in some of these strong companies like ServiceNow, HubSpot, Salesforce. All of these companies are companies that you do want to own over time, and you need to pick your points at where you want to buy them because their strong structural growth is still there. However, the companies that are really going to benefit from a faster growing economy in the nearer term are going to be those cyclical.
Right, because ServiceNow is down about 13% from that February 11th high.
Hey, what are you guys hearing from clients when it comes to portfolio construction right now? I mean, are you really overweight equities in general? And I know this is a question that depends on who the client is, but are you overweight equities because fixed income isn't doing anything?
It depends on the needs of the client. Some clients are more focused on income, some are more focused on capital appreciation. We're looking really at it, with a risk reward of different asset classes. So equities, you can get higher returns, but also they come with a higher level of risk than other asset classes. So really, for us, it's based on what is the client looking for, and then we have a very diversified. Actually, almost everything happening greater than we expected. So I think that we could, if anything, err on the side of more growth than we expect because of the stimulus. We could overshoot in some ways. Because, if you look at history, post these types of periods, people actually, it's almost like they come roaring back. And we may see that in the second half of this year. Earnings could be very back-end loaded. That could drive the markets. That's probably more of the risk than shutting down again.
Well, and going back to Peter Atwater saying you really can't go back to normal because there's just things that have happened, whether it's increased digitization. So it's this interesting conversation we're having around that. Sarah, thank you so much. Really appreciate it. Sarah Malik, Chief Investment Officer of Global Equities over at Nuveen, with us from San Francisco. We've got the closing bell coming your way in 3.5 minutes' time. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Wednesday, March 3rd. Steep losses for the U.S. stock market. The Dow, the S&P, NASDAQ, all declining. NASDAQ 100 down 2.9% today, lowest since January 6th. And this update brought to you by Witham, a forward-thinking advisory and accounting firm offering industry expertise and innovative solutions for your business. Experience the Witham way. Innovative, adaptive, effective, trusted. Visit Witham.com for more. The renewed bout of Treasury volatility spurred a gauge in bond yields, dragging down stocks as investors grappled with concern over stretched valuations. S&P slumped 50 at the close, worst level of the day, down 1.3%. The Dow, swinging between gains and losses for much of the session, ended, though, with a 119-point drop, down 0.4%. NASDAQ down 361, dropping today by 2.7%. So it was a down day for the Dow, the S&P, and the NASDAQ Composite Index. The 10-year yield right now, 1.46%. As for the market backdrop, Sarah Malik is Chief Investment Officer at Global Equities at Nuveen. She was our guest moments ago here on Bloomberg Business Week.
Valuations on the S&P are over 20 times at this point, and we need that earnings growth to kick in to drive the markets higher, because we don't expect any more valuation expansion. And the beneficiaries of that faster earnings growth are going to be those shorter duration cyclicals. And the source of funds for those cyclicals will most likely be technology stocks. And that's why you're seeing these tech stocks continue to compress.
Snowflake's fourth quarter revenue, $190.5 million. Estimates, $178.5 million. Stocks lower, S&P down 1.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking. Let's do it.
On Bloomberg Radio.
All right, let's take a little bit of a deeper dive into the close and really looking at some of the earnings crossing. Charlie mentioned Snowflake, fourth quarter revenue, $190.5 million. Estimate was for $178.5 million. So a beat on the bottom line, on the top line. If I take a look at fourth quarter earnings, it was a loss actually of 70 cents a share versus a loss of $1 that was expected. That's quarter over quarter. So we are seeing that company come out beating on the top line, and it looks like beating on the bottom line as well.
Yeah, Snowflake seeing first quarter product revenue $195 to $200 million. Estimates, it's within estimates, above estimates. Estimates were at 194.8. Splunk also out with earnings right now. Fourth quarter revenue $745.1 million, beating estimates of $677.8 million. Adjusted earnings per share 38 cents, beating estimates of 3 cents.
Yeah, that stock bouncing around a bunch in the after hours, but higher. I saw it up a trade as much as almost 5%, I think, higher. Now it's still up. Splunk, that is, up about just shy of 2% here in the afters. The company says it sees first quarter product revenue of 195 to 200 million, and the estimate is 194.8. So they're definitely bumping up that number.
Yeah.
All right. So we're watching those earnings. We are looking for American Eagle. We've been hearing from a lot of retail names as well. S&P 500, just a quick big picture look. 214 names in the index. By the close, higher, 287 lower, 4 and change. Major industry groups.
Yeah, energy leading the pack, up 1.42%. Financials and industrials also in the green, but energy the clear leader there. Look, seeing what we saw in the NASDAQ today, the information technology sector down, the worst performer in the S&P 500, down 2.49%. Consumer discretionary not too far behind, down 2.38%.
And again, Splunk is up almost 7% in the after hours. It looks like Snowflake is down about 6-7%. Let's bring in Bloomberg News cross-asset reporter Sarah Ponzak, because you are looking at a couple different things that we're definitely interested in, including Kathy Wood and ARK, her ETF, her flagship ETF, Innovation ETF. I don't know, would you say it's in a technical bear market? It's what, had a 20% correction here?
Technically, so since February 12th, which is the same date that we did see the S&P 500 peak as well, ARK has now fallen at the close 20.1%. So classically, in your definition of a 20% fall from a peak, that really classifies a bear market. So if we're going to run with that, this really is a continuation of what we've been seeing for a couple of weeks now, where we are seeing this rotation out of more speculative, riskier assets with high valuations that have seen phenomenal growth prospects or price rises, I should say, in their share prices over the last year into more beaten down cyclical value areas. And Tim just ran through the sector layout for us. And when you see on a day like today, energy up 1.4%, which is, of course, the best performing sector this year. Financials not too far behind. And then at the bottom of the pack, when you see numbers like tech falling 2.5%, you see this very, very, very wide gap. And it's even more pronounced at the individual stock level when you look at companies like Tesla, like Apple, like Amazon, like Roku, Square, which are also very large holdings within the ARK fund. We just continue to see these types of companies hit day after day. And this really, as investors, just expect interest rates to rise.
So does this continue for ARK? I mean, obviously nobody can see the future, but what do you think investors are thinking about when it comes to Cathie Wood?
Right. So when is enough? And I know you guys have spoken to Cathie Wood before, of course, and also many investors in ARK funds would say, part of the reason you invest in a fund like ARK or you invest in holdings within a company like ARK is the stories of the companies that a fund like ARK holds. For example, Tesla, many people who have invested in Tesla over the past year or so weren't so much investing in Tesla because it was a value play, but because of the value proposition you think that a company like Tesla is going to add years and years and years into the future as it grows in the EV space and grows into a dominant EV player. And that's really the narrative and the story for many of the holdings in a fund like ARK. So it makes you wonder, and of course, yes, we can't tell the future, but down 20%, is this a point where all of a sudden we are going to see many people who are now more aware of ARK after the last year, it growing so popular and Cathie Wood becoming so well known? Are we at a point where many people are going to see ARK possibly at a discount and say, I still believe in the long-term growth story for many of these holdings that I want to buy in?
Which is, as you said, like this is what she's about. And she said that to us a couple of times when it was either Bitcoin, like things don't go up in a straight line trajectory. And she has these long-term strategies and stories that she and her team have built out, and they believe in it, Tim.
Yeah, 5 years is what she said, 5-year time horizon.
Right, exactly. And listen, Sarah, I think about all the conversations we've had that we are often, because of kind of who we are and we follow the markets quarter to quarter, focused, and that makes it hard for companies to maybe think about some long-term strategies.
Oh, it's absolutely true. When you're looking day to day at volatility, I mean, today certainly was one of the largest down days that we've seen in quite a while. Actually, if you look at the NASDAQ, it's the worst two-day drawdown since September. And in September, that was when we did see the correction in the NASDAQ at the time. And the NASDAQ's now down about 8% from a high, so nearing correction territory, which is that 10% mark. Right. But then you consider just a couple months later where the NASDAQ stood after falling into a correction. And if you had invested then, it would have turned out great for you.
All right, got to run. Sarah, thank you so much. And we're going to go right to Dave Wilson. We squeezed you. I squeezed you. Dave Wilson, stock of the day.
B&G Foods. You may not know the company name, but they've got brands like Green Giant, Le Sueur Vegetables, Ortega Mexican Foods, and one they bought in December from J.M. Smucker, Crisco Cooking Oil. BMG ticker is BGS. The shares are up as much as 73% in January when they were swept up along with GameStop and other favorites of amateur traders. B&G has since given back almost the entire gain. The slide accelerated for fiscal fourth quarter results came out late yesterday. B&G's earnings and sales trail analyst average estimates in a Bloomberg survey, and the company failed to provide a profit forecast for this year, even though it had reinstated annual projections in November. Now, the disappointment sent B&G's shares to their first loss after an earnings report in 7 quarters. They were down as much as 10.5% and closed with a loss of 7.2%.
Ouch. Ouch, ouch, ouch. In a downward market, or especially when we saw like the overall market take a little bit more of a leg down. Dave Wilson, thank you so much. Thanks for the squeeze there. You have a good night.
Thanks, you too. I'll see you tomorrow.
All right, it'll be Thursday. Yay. All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, this is concerning. Capitol Police say they've uncovered intelligence of a possible plot by a militia group to breach the U.S. Capitol tomorrow, nearly 2 months following the attack aimed at stopping Congress from certifying Joe Biden's presidential victory. Acting Capitol Hill Police Chief Yogananda Pittman addressed it during a House hearing today.
We do have some concerning intelligence. That intelligence is law enforcement sensitive, and it wouldn't be prudent of me to share it in a public hearing.
The threat appears to be connected to a far-right conspiracy theory that Donald Trump will rise again to power on March 4th, which was the original inauguration day until it was changed in 1933. As for the January 6th attack, the commanding general of the D.C. National Guard testified before the Senate today that while the nation watched the Capitol being trashed, acting Secretary of Defense Christopher Miller delayed the needed green light to deploy the National Guard.
He got the Pentagon approval right away during the summer Black Lives demonstrations, but Brigadier General William Walker said Miller kept control on January 6th. He described a phone call with the chiefs of the Capitol and Washington Metropolitan Police.
Chief Conte and Chief Son passionately pleaded for District of Columbia National Guard to get to the Capitol with all deliberate speed. The Army senior leaders did not think that it looked good, it would be a good optic. They further stated that it could incite the crowd.
Walker said it took more than 3 hours for the OK to move the Guard out of their armory. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. Charlie Pellet joining me on a story that's in Bloomberg Business Week, and it talks about how the technology world, and I do feel like to some extent, Charlie, when it comes to working from home, we're going to see maybe potentially some separation between working from home and tech versus the rest of the world.
Indeed, and I can't tell you how glad I am to be back in the office today. And yes, that is a loaded statement in the context of this particular story. Not going to get into my opinions, but there are a lot of good reasons to be working in the office rather than from home. However, the thrust of this story is that technology is embracing work from home forever as the ultimate perk in the war for talent. Now, Carol, doesn't it just seem not only a few years ago we were talking about all of the great things about coming into the office, the pool tables, the snacks, the slides from going floor to floor, foosball, all of these nutty distractions that ultimately keep people working harder and longer and theoretically inspire people. But the whole goal just a couple of years ago was to get people into the office, not working from home.
It's like, never mind.
Yeah, so it seems. But
well, this story profiles one individual, and it talks about she had a friend who worked at Shopify and had long tried to persuade her to come work with him. And she had family commitments that kept her in the Bay Area, so she always said no to moving to live near Shopify's headquarters in Ottawa. And then in May, Shopify went digital by default. And basically now it's like, hey, okay, you can live there and you can come work with us still.
Yeah, and you know what? I know that many of our listeners are thinking, you know, if I ever had an opportunity where the only offer was you got to work from home, forget the offer. I like coming into the office. You know, you got better lighting, better neighborhoods, better chairs, no distractions.
They broke the mold with you because there are people who want some flexibility.
You know, and you know what? In times of stress, when there are natural disasters, I can understand working from home. As a policy, I don't see it sticking around. That's my opinion.
You said you weren't going to be opinionated.
I know. Look what happened.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Earnings news after the bell. American Eagle, fourth quarter adjusted EPS 39 cents. Estimates there 36 cents. Shares of the retailer trading lower, down by 4%. We also heard from Splunk. It reported revenue for the fourth quarter that beat the average analyst estimate. Splunk shares are up now by 2.7%. It was a down day on Wall Street. A surge in bond yields dragged down stocks as investors grappled with concern over stretched valuations. 10-year yield 1.46%. S&P down 50, a drop of 1.3%. The Dow down 121, lower by 0.4%. NASDAQ down 361, a drop of 2.7%. Gold down 1.4%, 17.14 the ounce. West Texas Intermediate crude up 2.5%, 61.26 a barrel. Again, recapping, S&P down 50, a drop of 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, I mentioned this earlier. It is another one of the most read stories on the Bloomberg about sick days in the era of working from home. Are we doing it? Should we? What's it doing to our work life and our health? Digging into that is Sarah Green Carmichael, Bloomberg opinion editor at Bloomberg News. She's with us on the phone in Massachusetts. Sarah, so sick days, you know, it's really interesting in this era of the health pandemic and COVID. We've all become like, if we sneeze or we cough at the office, it's like we look at each other and we'll be like, no, it's not COVID. Or we think about it twice if we're coughing at home, like I'm not going to go into the office or something. At the same time, what are you seeing? And are people taking sick days?
You know, it's a funny thing because many companies during this year have expanded their sick leave policies, you know, to help fight COVID spread at work. But it seems like employees are not actually taking advantage of those expanded policies. Instead, what we're doing is kind of just working from home, which many of us still are doing, you know, a year into this thing. So one survey I looked at found that half of the respondents had taken partial sick days without telling their bosses, and 7 in 10 said they just kept working even though they felt sick. So the ability to work from home really seems to be making the sick day obsolete.
Yeah, it's interesting. I guess you feel uncomfortable, right? And I guess some people should be, right? Because you're maybe not as productive. I know when I'm really sick, I'm a mess.
Yes, same. And definitely, I think I would hope people still are taking sick days for those times when they are completely, you know, not capable of doing their jobs. It's very hard to be productive if you are that sick. There's also lots of non-contagious reasons you might need a sick day. You know, people have other health conditions they have to manage, you know, whether it's migraines or cancer or something in between. So I think it's important that sick days continue to be a norm and that even if we're working remotely, we can still take them because those productivity losses are real. You know, putting in time when you're not doing a very good job at your job, you know, you might be doing more harm than good. But companies really have to make that explicit because I think left to our own devices, we just feel guilty taking time off.
Yeah, exactly. And I know we've had these conversations here around the Bloomberg offices that, you know, everybody feels a little bit stretched. And you do think about if you call in, you know, because you do have kind of some people at home, some people at the office, it can be difficult to, you know, try and make sure you're covering everything, getting everything done. And then if you don't, you know, show up, if you're working from home, even if you don't feel well, you do think about the stress it's putting on the team.
Yes, and I think before when working from home was not as much of an option, you could always tell yourself, well, it's important that I not infect anybody. So at least if I stay home, my colleagues hopefully will be grateful that I'm not infecting them. But now we've made it so easy to log in from wherever. It really can feel strange to, you know, maybe put your colleagues in the lurch a little bit. But I think the thing to keep in mind is that it's much better for your team to do without you for a day or two than to have you working at half capacity for a week or two. And I think the more that work teams can establish as a norm that you guys are going to look out for each other, the better off we'll all be.
Listen, there's a line in your story too, and this goes to productivity. Researchers who study cognition have found that being sick impairs brain function as much as drinking alcohol or pulling an all-nighter. I had to just kind of read it again, say it again, because you don't think of it that way, right? You think, I can get through this, but there is a significant impact.
There is a significant impact, and even something as simple as loss of sleep can have a really significant impact on brain function. So I think that's important to remember, because especially those of us who can work remotely often are making judgment calls. We're doing work that, we do with our brains. And if your work really relies on you being sharp, it might not be the best thing to be working when you are not feeling well.
I got to say, everybody knows on air when I haven't had enough sleep, because it's hard to put words together. So what based on the research and based on writing your column, how do you think things move forward? Because we have a lot of stories, and your story's in Bloomberg Business Week this week, but we've been talking a lot about the 4-day work week and profiling companies that are doing that and what that means for productivity and so on and so forth. Ultimately, as we move forward and try to figure our way forward, how do you see it when it comes to something like sick policy? Could there be different sick policy for people working from home versus people in the office? Like, how do you think this unfolds?
I do think that we need to rethink some sick policies. I think it's important to keep offering sick leave, dedicated sick leave, because otherwise people don't take it, right? They hoard it to use as a vacation time, or they just don't take it at all. And it is important to the business that people be able to get treatment for conditions they have. It's much cheaper to treat someone's medical condition than it is to pay them to do a bad job because they're sick. So I think what really has to happen is that, really it's about building trust on teams. And I know that sounds a little like a cliche or like it can't happen, but there are teams where people trust each other enough to say, hey, I'm just not available this afternoon. I'm really not feeling well, or whatever reason they give. And on those teams, everyone knows that they can do that. And those teams in the long run perform better. So I think focusing on that team level trust is the way that we're going to get out of this one.
I've gotten over feeling guilty about saying, hey, I'm offline right now. But it'll be interesting, too, and we'll see if there's geographical differences as we move forward. My colleague Matt Miller talking about the vacation days he gets in Germany versus what we get in the U.S. I mean, there's different, approaches to how everybody looks at this. Great column. Thank you so much. Sarah Green Carmichael, editor of Bloomberg Opinion, on the phone from Massachusetts. Her story will be featured in the upcoming issue of Bloomberg Business Week magazine. You can find it, though, right now on the Bloomberg terminal and at Bloomberg.com/businessweek. Coming up, we're going to check in with the former COO and CFO of Impossible Foods and his new venture. He's president of App Harvest. We're looking forward to that. That's coming up on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So coming up, we're going to talk with the president of App Harvest. They are on a mission. It's all about how we feed people in the future and how they are doing it. He's the former CFO and COO of Impossible Foods. So delighted that we're going to have David Lee back with us, and we'll get to him in just a second. Back to some of the news after the closing bell. Back to Charlie Pellet.
Very much, and here's what's going on. Lots going on after the bell. Let's begin with the Walt Disney Company closing at least 60 stores in North America this year, about 20% of its global total. Okta, which is a maker of identity verification software, has agreed to buy smaller rival Auth0 for about $6.5 billion in stock. Earnings news: American Eagle's fourth quarter adjusted EPS 39 cents, estimates there 36 cents. Splunk out with revenue for the fourth quarter that beat the average analyst estimate. Splunk shares trading higher after hours. The renewed bout of Treasury volatility spurred a surge in bond yields today, dragging down stocks as investors grappled with concern over stretched valuations. S&P down 50, a drop of 1.3%. The Dow, which held on to gains for much of the session, ended with a loss of 123 points, down 0.4%. A lot of the selling in the Dow coming in the final few minutes of trading. NASDAQ plunged 361 points today, down 2.7%. 10-year yield 1.47%. Gold down 1.3%, $17.15 the ounce. West Texas Intermediate crude rallied 2.4% today, $61.20 a barrel, lifting oil stocks. So it was a down day for the U.S. stock market. Now, what about the economic backdrop? Michael Feroli is chief U.S. economist at J.P. Morgan Securities.
We see GDP growth this year around 6.5%, but we also see above-trend GDP growth persisting next year. So a lot of the stimulus that we're expecting should be somewhat delayed. So, for instance, a lot of the aid to state and local governments won't necessarily get spent quickly. So that should support growth on into next year.
Lyft shares surged today after it forecast an adjusted loss for the first quarter of 2021 that beat analyst estimates. Lyft shares getting a ride higher today. We saw Lyft up by 8.2%. Crosstown rival in San Francisco, Uber, up by 2.7%. Again, recapping equities lower. 10-year yield 1.47%. S&P down 50, down 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Brokers studio. And coming up, we've got a great guest. We've talked to him a few times before when he was Chief Financial Officer of Impossible Foods. And we've talked a lot, too, on air about just how food production, food products in general, they are seeing a lot of disruption, a lot of innovation when it comes to how we produce food or the types of offerings that are out there. And that is expected to continue when you talk to a lot of those individuals in those space, and it's just a case of kind of scaling up. So let's get to David Lee, because last time we did talk with him, he was CFO of Impossible, and he was on the board of the green tech ag startup App Harvest. Well, he's now president of App Harvest, which now trades under the ticker APPH after going public via a SPAC. It's a certified B corporation. So David, so nice to have you back here on Bloomberg. How are you?
I'm well. I'm so glad to speak to you again. I'm excited to share the latest about App Harvest.
Well, tell us about the latest. You guys have gone public. Why? And why through a SPAC?
Well, at App Harvest, we recognize the urgency of the mission we have required that we find long-term partners and access capital to scale our business fast. And with the ability to partner with Novus Capital and now to be traded on NASDAQ, it's a wonderful sign that investors are ready for companies that are making a better food company. You know, we like to think our product using a fraction of the water and producing a delicious tomato for now, but more to come, will appeal to consumers. But we're now seeing that our company, a company that treats its employees better, that's better for the environment and for consumers' health, is being appreciated by investors as well.
Yeah, it's interesting to see. And I feel like a lot of investors are looking, I talked about innovation, disruption. We've seen it in a lot of spaces. And I think, everybody's now watching the food space very closely. You mentioned, David, tomato. You mentioned less water. It's indoor. There's no chemical pesticides. The yield is about 30 times more. You're doing it in Appalachia. That's where you're doing it. So in an interesting part of our country, specifically, I called it a green tech ag startup, but I feel like you are doing a lot more in terms of the cycle and supply chain of food. What is it about the technology that to you really stands out and is very strikingly different from what we know and we've come to understand is how we get all of our food?
Absolutely. I like to think that AppHarvest is revolutionizing food from seed all the way to the plate. That means that the non-GMO beefsteak tomato seed that we grow in these enormous greenhouses, since we have a 60-acre indoor farm, nearly 2.8 million square feet under glass in the heart of central Appalachia, that we not just grow great tomatoes from the seed, but that we employ highly skilled workers in the United States who can have a great living wage and make a product that uses 90% less water, have no chemical pesticides, and tastes great. It's from seed to plate that the whole company is designed to be better. And whether it's our nano-level technology that allows us to have the right amount of nutrients and oxygen in the recycled rainwater, or the fact that we're looking at automation to help our human employees, the data intensity, we have AI so we can watch how our plants each grow. It's all of that that allows us to stop shipping in nearly 2/3 of the vine crops we import into the United States from outside the country.
Right.
It's all the way from seed to plate. That's what we're seeking to do here at AppHarvest.
And for those folks who are watching us right now on YouTube, you can see some of the video in terms of what they're doing, or go to their website because your greenhouse is massive. I think last time you were on, we talked a little bit about this, but what about power efficiencies? Because I know one of the concerns has been about some of hydroponic and some of these in-house big greenhouses is the use of power.
Yeah. Well, we're working hard to leverage, for example, passive solar and new technology. We like to use the natural place that we're located for the recycled rainwater, and for the fact that we can use the natural sunlight that pierces through our farms. The country just went through a lot of tough weather in many parts.
Mm-hmm.
And what I was gratified to see is the hard workers at AppHarvest in our Moorhead farm, sometimes they had to show up in a tractor, but they showed up, and our business model ended up being incredibly resilient, much more resilient than an open field farm would be. And so we'll get better and better on everything, on how we use water, on how we reduce our power consumption. But for now, we thought it was important to create a big step forward for U.S. agriculture in Kentucky.
Hey, sit tight for a second, David, because I am curious about how you scale this up globally, and I want to get into that in just a moment. Got to do a little bit of news, and we'll come right back to David Lee, president of AppHarvest. In the meantime, back to Nancy Lyons for Check on World and National News. Hi, Nancy.
Hey, Carol. New York Governor Andrew Cuomo is making his first public comments on a growing sexual harassment scandal. 3 women, 2 former aides, and a total stranger have accused him of inappropriate behavior.
I feel terrible that these people felt uncomfortable, felt hurt, felt pain from the interactions.
During a news conference, he said he would not resign, but would do the job that New Yorkers elected him to do. Well, some new allegations are being leveled against former White House physician Ronnie Jackson, including drinking on the job, fits of rage, and inappropriate comments about a female subordinate. Bloomberg's Nathan Hager has more on that from Washington.
Those accusations come in a long-awaited Pentagon Inspector General's report. The Washington Post reports the watchdog interviewed 60 of Jackson's former colleagues at the White House Medical Unit, and only 13 had good things to say about him. One witness told investigators Jackson established a workplace where fear and intimidation were hallmarks. Jackson is now a freshman congressman from Texas. Before the report's release, he put out a lengthy statement accusing the IG of dredging up false accusations because, quote, I refuse to turn my back on President Trump. In Washington, I'm Nathan Hager, Bloomberg Radio.
People familiar with the discussion say Donald Trump is strongly considering another run for president in 2024 without Mike Pence as his running mate. He's said to be looking at those who stood by him at the end of his term. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar along with Charlie Pellet. Charlie, we're going to get back to David Lee, who was formerly CFO and COO over at Impossible Foods, now president of App Harvest. There's a great story, though, on the Bloomberg popping up on our radar. Actually, our producer, Paul Brennan, caught it, about U.S. farmers seeing meatless protein at 10% of the market in about 5 years. So we're talking about the products that come from Beyond Meat or Impossible Foods and a lot of other players that are getting into this place.
Indeed, and let me repeat the first paragraph on the story, and it's only a sentence, not well, there's also a paragraph, but it's only a sentence. But this really puts the tone of this story in context. It says, American farmers whose livelihoods are staked on producing the nation's meat see plant-based imitations rapidly gaining market share. That's big news, because you got the meat producers say they see meatless protein really increasing over the next 5 years, putting that number at 10% of the market. So significant gains there.
Yeah, faux meat right now currently making up just 1.5% of total meat sales at grocery stores. And listen, American Ag, has to some extent not necessarily seen the writing on the supermarket walls, because consumer tastes are shifting. We see it. People are looking for healthier options, different options, a move away from meat, a move away from a lot of the staples that we all grew up with.
Indeed, betting it's big in the Master household, but it's not just consumer tastes, according to our story. The worries about plant-based protein come as farmers also expect more stringent environmental regulations and potentially higher taxes under the Biden administration. So you got a couple of things here at work, but no doubt consumer preferences have to be a major part of this story.
I'm just going to say, though, a lot of folks who come on and look at the food world and feeding this ever-growing population globally says we're going to need a ton of options. And just for the record, Charlie, I love a great steak.
Well, there you go. And I love a great veggie burger because they taste pretty good.
Love a great steak. Just going to put it out there. All right, you're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Snowflake shares tumbling in extended trading after projecting its product revenue growth will slow in the current quarter and fiscal year. Shares now lower by about 4%. Investors have soured on the company that debuted in September with the biggest U.S. IPO of 2020, fearing the maker of data warehouse software for the cloud is overvalued. American Eagle Outfitters is reinstating its dividend. A down day on Wall Street. A lot of selling in the final few minutes with the Dow moving from a gain to a loss. The Dow down 121 points, down by about 0.4%. The S&P was down 50, a drop of 1.3%. NASDAQ down 361, down 2.7%. 10-year yield 1.48%. The renewed bout of Treasury volatility spurred a surge in bond yields, dragging down stocks as investors grappled with concern about stretch valuations. Again, the 10-year, it was the yield on the 10-year 1.48%. This headline from the Bloomberg Professional Service: Melvin Capital gained 22% in February after the GameStop rout. Gold down 1.5%, $17.12 the ounce. West Texas Intermediate crude up 2.3%, $61.12 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Hey, I want to get right back to David Lee, president of App Harvest, former CFO over at Impossible Foods. Hey, David, before we get back to talking about App Harvest, I want to know something our team wanted to know. I mean, you were both COO and CFO over at Impossible, and many would argue they were on the cusp of just a lot more to come. Why did you move on?
Well, to be clear, I'm a huge believer in Impossible Foods, and between you, me, and I guess the rest of the world on this call, I exercised every single option that I was granted because I really believe in the business we built. It was interesting. I was listening to some of the commentary on your show, and you know, when 90% of your consumers at Impossible Foods are meat eaters like you, and when you can raise $1.5 billion from sophisticated investors, kind of shows that the world really is ready. Not the plant-based world, the meat-eating world is ready for products like the Impossible Burger. So to be clear, I am an absolute huge believer in the business we built there.
And full disclosure, I've had some plant-based sausage, some beef. I have tried it. So I do try it. Well, the thing is, I also, listen, what you guys are doing too at App Harvest.
Okay, traders, I'm going to cancel my stop and profit order. I'm going to sell it tomorrow because right now after 10 o'clock will be quite hectic market because usually banks, brokers, they trying to reallocate their assets, and spread might increase to 10, 15 pips. So it might get filled straight away, or will be gap between this order, and I might sell it with losses. So you need to cancel this order as well. And tomorrow in the morning we will place the order. We will see what's happened with market, and we will place the order based on the data and information at that time. Okay? So I'll speak to you tomorrow. Have a great evening. Bye for now.
Your advantage. I mean, the recycled rainwater is because our farms are in areas that seem to be getting wetter and wetter. And then it requires a recognition that you have to be transparent. You have to shoot straight with the consumer. The consumer's pretty sophisticated. They'll pick the right future. But they got to be given another opportunity to pick better for their own health, but also for the planet. I think all these things are important. It's why all of us together, Impossible Foods, App Harvest, many of the companies you cover, all of us are required to achieve the outcome we expect.
Well, cousin TJ, who's listening to our show big time and just sent me, I had tweeted out a shot of your website, and he highlighted back, you know, central to our mission, meaning your mission, App Harvest's mission, we're within a day's drive of 70% of the population. You know, solving climate change will ultimately also mean, like, if we can figure out how to grow things, make things grow, locally. And I do think about that. How much of what you guys are doing can we scale up? Can we do enough of this around the country to make, to provide a significant portion of food to Americans?
Absolutely. Some have forecasted, many studies have been done. One says that the U.S. needs 20,000 acres of climate-controlled farms like ours. And if you think about it, all the long-distance trucking of tomatoes and vine crops brought in from outside the United States doesn't do the world any good. And frankly, doesn't give the consumer a great-tasting product. Oftentimes they're covered in these chemical pesticides. The Netherlands is an incredible real-world example of a country that embraced these enormous, at-scale indoor farms. And they're one of the largest exporters of produce to Europe. We intend to do the same thing, right, in coal mining country in central Appalachia. Take some of those lost jobs to the coal mining industry and turn them into sustainable, skilled labor that serves more locally product that people can believe in. That's the idea, and I think we can do it.
Well, it's interesting you brought up Netherlands, because reading around your website and just reading in on this, I was going to ask you, because you guys are tapping into the ag and construction firms and universities in the Netherlands. I mean, what is it about? What do we need to know here in the U.S. about what Netherlands is doing when it comes to farming? Because I do feel like these are the trends, the innovations that investors are going to be increasingly looking at.
Well, I think it's a wonderful case study. Many investors, they need to understand how things can be accomplished. And the great news for AppHarvest is the technology of today pioneered across the world, not just in the Netherlands. I was on a call with a large institution in the Middle East. There are parts of the world that have developed not only the technology, but the economy, as you find in the Netherlands and Holland, as well as the expertise to produce large-scale farms that produce product better. I think that when you have technology that already exists and consumers that have long awaited something better, it just takes corporate will and capital to achieve the outcome.
What about the cost of the produce that's going to come out of it? The criticism for organic for a long time, and probably still to some extent, is just like, okay, it's great, but not everybody can afford it.
Well, it was really important that we create the ability to be affordable and available. A big part of that for us is the fact that we can increase yield by 30 times. When you have a 30 times improvement in yield, when you use 90% less rainwater, and you, as a result, produce a product that actually is better than the average product, we think we'll be able to provide a great, compelling cost. Sometimes we talk about our product is actually premium in quality, but we don't intend its price to be premium because we think our economics can bear out affordability as well.
Hey, just got about 30 seconds left here. So what are we going to be hearing from you guys in this coming year? Is it build out? Is it more investors? What should we expect from, just quickly?
I think it's going to be very similar to what you've seen in the last 60 days. There's going to be build out. There will likely be more and more investors interested in a company like AppHarvest. We'll have to wait and see. And you're also going to see us be able to look at other companies and partner with them. One of the privileges of being early to being public when you're a pioneer in the U.S. in your field is that you can set the course and find other like-minded companies. And through partnership and business development or outright acquisition, create a brighter future. I think all those things will come in time.
Well, I hope you'll continue to carve out some time for us, because we'd love to hear more about your progress as you continue on this. David, thank you so much. David Lee, he's president of AppHarvest, former CFO and COO at Impossible Foods. All right, coming your way in just a few minutes. Sound On with Kevin Cirilli. What are you talking about?
Alyssa Farah, former White House Communications Director, and Mike McCall, top Republican on House Foreign
All right,
Relations.
so much to talk about, right?
Yeah, lots to go through.
All right, looking forward to it. Sound On with Kevin Cirilli, coming your way right here on Bloomberg Radio. For the whole Bloomberg Business Week team, folks, have a good and safe evening. I'm Carol Masser.